You can always find something wrong if you really want to. It's so easy that you can gin up mistakes on a daily basis. Funny thing, though, what went wrong goes right. Nobody acknowledged it. The hurdle was overcome. That's the worst case never happened. Never acknowledged. And that's how you can end up with days like today, where the Dow gained 114 points, S&P advanced 0.21%, NASDAQ jumped 0.45%, despite an overwhelming chatter of negativity at the opening from both analysts and the media. Front and center, let's talk about the bond market for a moment. I always like to remind you that bonds are more important than stocks. They're determinants. They're much bigger than but they're much bigger than stocks. They're supposed to tell you what happens next. But lately, bonds have been consistently wrong. They haven't helped you at all to make money in stocks. Instead, they keep encouraging you to trade the wrong way. A few weeks ago, we came in every day, and saw that the 10-year Treasury yield kept climbing ever higher. Each tick drove stocks lower. We seemed doomed. Yet in the last few days, yields have plummeted. And today we hit a level that we haven't seen since April 7th, when we thought we were going into a tariff-induced recession after Liberation Day. That's right. The yield on the 10-year is back to where it was when we thought we were facing Armageddon. This time, it's thanks to a weaker set of employment numbers, much less dangerous and certainly reversible. Something that was horrible morphed into something fabulous. But it wasn't even noticed. And the people who were saying, well, they're gone. Now, I've had the tape rewound for things that I've said wrong, and I own them. I try to get more right than wrong, okay? However, I expect to be called out when I make a mistake. No one called out the boys who cried wolves about the bonds, though. Yet I'm sure many of you sold things because you heard that interest rates were rising at unheard of levels. Hey, by the way, it didn't matter that we actually had heard of them. It's just that they were heard 30 years ago. Now, I traded through that period, so I know that 10-year going to 5% wasn't the end of the world. In fact, it was actually a halcyon time to make money. For weeks, we were told that rates were skyrocketing, and honestly, some of the media reported it that way in order, I think, I'm not kidding, to scare you.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.